Welcome to the Auditor General's webinar, Permanent Base Adjustments and One-Time Overrides. Today we will be going over the background and requirements of these items, as well as our office's role in reviewing them. For those of you who are somewhat new to government finance, we thought some background information would be helpful. During the late 1960s and 1970s, many states began experiencing dramatic increases in property taxes as assessed property valuations rose. Unfortunately, personal incomes did not rise at the same rate. So as a result, property tax bills became increasingly hard to pay. Arizona legislators responded to this trend by establishing spending limitations for state and local governments to reduce the need for increased taxes. Article 9, Section 17 of the Arizona Constitution set state limitations to 7% of the personal income of all state residents. And in June 1980, Sections 20 and 21 were added to Article 9, imposing expenditure limitations on counties, cities, towns, and community college districts. These limitations were formulated using a base year's expenditures and allow for increases in spending each year thereafter based on a factor related to population and inflation. The base year amount was established based on local governmental expenditures in fiscal year 1979-80. The Economic Estimates Commission, or EEC, is responsible for making these yearly calculations. In the next legislative session, Arizona Revised Statute Section 41-1279.07 was adopted, establishing the Uniform Expenditure Reporting System, or UERS, to implement the local spending limitations. Our office, the Auditor General, was given the responsibility of developing and implementing this system, which our office has done through the UERS manual. Expenditure limitations are intended to limit the spending of local revenues. For most political subdivisions, local revenues would include property taxes, sales taxes, and other similar revenues. The UERS is not intended to restrict an entity's ability to obtain and expend revenues from non-local sources such as federal grants. It is important to know that sanctions and penalties are imposed on all political subdivisions that don't comply with their expenditure limitations, whether established by the EEC or voter-approved. The legislature also allowed some voter-approved exceptions to the spending calculations set out in the Constitution, two of which we will be discussing today are referred to as permanent base adjustments and one-time overrides. Cities, towns, and counties are subject to an expenditure limitation effective in the fiscal year following the first regularly scheduled election of governing board or board of supervisor members after July 1st, 1980. So why this somewhat odd effective date? Why not make it effective for all entities at the same time? Well, as we'll see in a minute, this gave municipalities the opportunity to adopt a voter-approved adjustment to the amount upon which the state-imposed limit is based, or an alternative expenditure limitation before they became subject to the state-imposed limitation. It also provides a similar opportunity to any new municipality. The EEC must provide each political subdivision subject to the UERS with an estimated expenditure limitation by February 1st, and a final expenditure limitation by April 1st of each year. The EEC will also issue revised final expenditure limitations for municipalities with annexations around June. If an entity approved a permanent base adjustment at the March or May elections, the final limitation amount will be revised to reflect the new base amount. Legislation may also impact expenditure limitations. However, this type of adjustment is very limited. The expenditure limitations issued by the EEC apply to the political subdivision for the following fiscal year.
As mentioned previously, the legislature allowed some voter-approved exceptions to the constitutional expenditure limitations set by the Economic Estimates Commission. One option available to cities, towns, and counties is a vehicle called a permanent base adjustment. If approved by voters, a city, town, or county can permanently increase its base year expenditures by a certain amount. There is no limitation on the amount of adjustment allowed. Remember, we said the base year's expenditures were determined in 1979-1980. By doing this, each year's expenditure limitation calculated by the EEC will be higher than it would have been had the voters not approved the adjustment. This adjustment is incorporated into the EEC's calculations. As a result, these entities are still subject to the state-imposed limitation. It is just that this limitation is now higher. About 1/4 of cities and towns, as well as several counties, have approved permanent base adjustments in the past. Additional adjustments, including home rules and one-time overrides, may still be adopted despite the approval of a permanent base adjustment. Analysis of the permanent base adjustment proposal must be approved by our office, and the adjustments are effective for the fiscal year following voter approval and each fiscal year thereafter. The Constitution also allows a few instances in which expenditures in excess of the limitation may be authorized. The most common of these is the one-time override. One-time overrides are set up for a specific expenditure amount and must be approved by the voters. They are not required to be reviewed by our office. One-time overrides are very different from home rules and permanent base adjustments and have a different set of requirements. A one-time override does not allow an entity to establish an alternative expenditure limitation for 1 year. Instead, a one-time override allows an entity to exceed its constitutional expenditure limitation by a specific amount in the fiscal year after the election. As such, the entity's resolution and ballot language should include the specific amount of excess expenditures that voters are being asked to authorize. The most common voter-approved expenditure limitation that is only available to cities and towns is the voter-approved option called an alternative expenditure limitation, also known as a home rule. Voters are asked at an election whether they would prefer to set their city or town's own limitation rather than adhere to the limitation calculated by the EEC. There are no restrictions on the method presented to voters for establishing this expenditure limitation. Home rules have been very popular and are used by over 2/3 of Arizona cities and towns. Our office, the Office of the Auditor General, must approve the analyses. Home rules are effective for 4 fiscal years, beginning with the fiscal year after voter approval. At the end of the 4th year, voters can be asked to extend the alternative expenditure limitation. Otherwise, the state-imposed limitation will apply. This webinar will focus solely on permanent base adjustments and one-time overrides. Home rules are addressed in a separate webinar.
Permanent base adjustments are voted on during the regularly scheduled general election or nonpartisan election for nominating or election of governing board members. One-time overrides are voted on during the regularly scheduled election for nomination or election of governing board members or in a special election on the 3rd Tuesday in May.
Cities, towns, and counties are required to submit to our office for review a packet for a permanent base adjustment that includes the following 3 items: the resolution, a detailed analysis, and a summary analysis. This packet must be submitted to our office at least 60 days prior to the election and before printing the publicity pamphlet. Due to early voting requirements, however, 60 days may not be enough time for entities to have publicity pamphlets printed after our review. Once our office receives the packet, we have 15 working days to review it. As a rule of thumb, the League of Arizona Cities and Towns recommends submitting the packet to us 120 days prior to the election. Sample documents are published by the League and can be viewed and downloaded from the Resources and Research section of their website, www.azleague.org. While most entities follow these sample documents, it is not necessary to do so. We will be using the League's documents in our discussion, highlighting the necessary elements that must be included in any packet submitted to our office. We will be discussing the requirements of the packet, as well as the things we look for in our review of these items, and the most frequent problems we find in each part of the packet. First, we will address the required contents of each document. Then we will go back over the documents and address some of the areas in which we find entities most frequently have issues. It is vital to note that this packet is to be objective in nature and should only contain objective information. Now we will go through each section individually. Let's begin with the resolution. This is a sample resolution included in the League's packet. We will show actual examples of the other sections later on when we discuss our review of those documents in more detail. The resolution is used to adopt and specify the terms of the permanent base adjustment. The league sample wording for the permanent base adjustment resolution indicates the question that will be posed to the voters, as, shall the expenditure base of the city or town be permanently adjusted by a certain dollar amount, as you will see highlighted in yellow. That dollar amount is the amount of the increase to the base year's expenditures that the entity is seeking, not the final increase in the following year's expenditure limitation amount. Also note, highlighted in blue, that the resolution submitted with the permanent base adjustment proposal must be adopted and an assigned copy must be submitted before we will begin our review. Per Article 9, Section 20, Subsection 6 of the Arizona Constitution, the resolution requires a 2/3 vote of council members.
The second item submitted in the packet is the detailed analysis. The detailed analysis contains the specific resolution number that was passed to seek voter approval to adopt the permanent base adjustment, the amount of the proposed adjustment to the base limit, specific areas in which the expenditures will be adjusted, the impact on the expenditure limitation in the first year the adjustment will apply if the permanent base adjustment is granted, specific amounts of estimated revenue from all sources which will be used to fund the additional expenditures, and any assumptions used in estimating the revenue. The third item submitted in the packet is the summary analysis. The summary analysis contains the total amount of the proposed adjustment to the base limit, the impact on the expenditure limitation in the first year the adjustment will apply if the permanent base adjustment is granted, a statement indicating the purposes for which the additional expenditures will be used, and a statement of the sources of estimated revenues to be used for financing the adjustment to the expenditure limitation.
Now that we have covered the required elements of the resolution, detailed analysis, and summary analysis, we will now discuss the things that we look for in our review of these items and the most frequent problems we find in each. Our first step is to review the dollar amounts included in the packet. To do this, we check several numbers used in the calculation of the limit to the appropriate source and recalculate the estimated limit before and after the permanent base adjustment for the first year the adjustment would apply. We begin with the population factor computation, which is demonstrated in the first table on this sample worksheet. Within the table, we start with the prior fiscal year population numbers. These numbers must be from an independent source, not the city or town's own estimates. The estimates can be obtained from the state's Population Statistics Unit, whose contact information is in our website in the Frequently Asked Questions area that we will discuss a little later. The Maricopa Association of Governments or other independent estimates may also be used if they are available. One of the most common errors we run across in these calculations is using the wrong year's population number in the calculation. So, which years should you use? Well, amounts in the calculation should begin with the calendar year, that is 2 years before the fiscal year of the permanent base adjustment. The reasoning behind this is that the EEC calculates the expenditure limitation in the year before the fiscal year to which the adjustment applies. So, the most recent data available for the prior fiscal year is actually 2 calendar years before the year to which the adjustment applies. In our example of a permanent base adjustment beginning in fiscal year 2013, the population figures should start with the amount for 2011. If you ever forget what year to use, you can get some guidance on our website under the FAQs. The next item we verify is that the entity has used the correct 1978 population number from the most recently issued calculation from the EEC. Once we have confirmed that the population numbers used are correct, we can then check that the population factors are calculated correctly. Population factors are calculated by taking the prior year population and dividing it by the 1978 population. For consistency with how the EEC will make the actual calculation, this number should be rounded to 4 decimal places. If you are using Excel to perform this calculation, there is a simple formula to ensure the rounding is correct. The handout slides contain this formula. Now we will move on to the second table of the worksheet, which is used to calculate the state-imposed expenditure limitation before the permanent base adjustment is applied. Once again, we look to see that the most current AEC, final or preliminary calculated state-imposed limitation for the entity to find the correct 1979-80 base year expenditures. This expenditure amount will include the impact of any previous voter-approved permanent base adjustments. Finally, we check that the entity used the correct inflation factors. Inflation figures are issued 3 to 4 times per year by the Arizona Department of Revenue. We also provide the most recent figures on our website in the FAQ section, and we update these amounts when new factors are issued. The sample forms issued by the League of Cities and Towns may already have inflation factors filled in. However, be sure to verify that these amounts are the most current factors before submitting the proposal to our office for review. In our example, inflation factors from 2011 should be used, for the same reason I mentioned in selecting the prior year's population numbers, as it would be the most recent data available when the Department of Revenue completed their calculation for the 2013 expenditure limit. Once all the amounts have been verified, we can move forward with calculating total expenditures under the state-imposed limitation before the permanent base adjustment. The projected state-imposed limitation is calculated by multiplying the 1979-80 base limit by the applicable population factor, as calculated in the first table on the worksheet, and applicable inflation factor. Now we will move to the third table on the worksheet, which is used to calculate the state-imposed expenditure limitation after the permanent base adjustment. The calculation begins with the new proposed 1979-80 base limit. This figure is comprised of the original 79-80 base limit used in the calculation in the table above, as well as the amount of the proposed adjustment the entity is seeking. Next, we verify that the entity used the correct population factor and inflation factor for the prior year as was used in the previous tables. Once all the amounts have been verified, the total expenditures under the state-imposed limitation after the permanent base adjustment can be calculated by multiplying the 1979-80 new proposed base limit by the applicable population factor and applicable inflation factor. After both expenditure limits are calculated, we can verify the total increase in the expenditure limit if the permanent base adjustment is applied.
Once we have verified the correct calculations of the expenditure limitation before and after the permanent base adjustment, we move on to a review of the detailed and summary analyses. A review of the detailed analysis is designed to detect problems in several areas. Specifically, we look for the amount of adjustment to the base year expenditure, highlighted in green, to agree to the resolution in the summary analysis. In addition, we look for the descriptions of expenditure purposes, highlighted in purple, to be specific and informative. In other words, we look for them to be meaningful to the voters. While the term HERF may be meaningful to you, it does not add to the voters' understanding of how the monies will be used. And here again, we look for the descriptions of expenditure purposes on the detailed analysis to agree to those on the summary analysis. Next, in our review of the detailed analysis, we verify that the increase in the expenditure limitation, as well as the reported limit before and after the permanent base adjustment, highlighted in red, agree to our recalculation, and that those numbers also agree to what is reported in the summary analysis. We also look at the estimated revenue amounts to see that they are sufficient to meet the increase in limit. These revenues do not need to meet the total limit, just the increase based on the wording in the League's packet. The revenue detail is highlighted in gray. In addition to the amount of revenues, we also look to see that the entity has included information on the revenue assumptions, highlighted in blue, for all revenue sources in the detailed analysis, such as federal, state, and local revenues. Finally, we look at the detailed analysis for consistency with the general information in the League packet. There is additional information in the League sample analysis that the entity may want to include as well. However, this is not necessary. What we have discussed here is what is required only. If the entity chooses to include additional information, as illustrated in the League's packet, We will review it to ensure that it appears factual and objective. When using the leaks packet, there are parenthetical remarks that may or may not apply to your entity. When the wording does not apply to you, it should be deleted from the analysis. Likewise, if the wording does apply, it should be included and the parentheses around the statement should be removed. Moving on to the next part of our office's review of the permanent base adjustment proposal, we come to the summary analysis. As I already mentioned on the previous slide, we look for the amount of adjustment to the expenditure based on the summary analysis to agree to the detailed analysis and the amount stated on the resolution. The total increase in limitation, the original expenditure limitation, and the expenditure limitation after the base adjustment should also agree to the detailed analysis. This information is highlighted in red. Further, the expenditure descriptions in purple should be specific and informative and agree to those in the detailed analysis as previously mentioned. Lastly, we look for the statement detailing the sources of estimated revenues to be used for financing the adjustment to the expenditure limitation to agree to the detailed analysis. This statement is highlighted in yellow in our example. After our review is completed, the packet will be returned to the entity and no revisions may be made after our office's review.
Before the election is held, each entity must submit a copy of its publicity pamphlet to the Auditor General. Our office recommends that the city, town, or county submit a copy to our office to review and comment on prior to printing. ARS Sections 41-56303B and 19-123 specify the content that should be included in the county, city, or town's publicity pamphlet. Specific to the base adjustment vote, information provided should include the form in which the permanent base adjustment will appear on the ballot, including the official title, descriptive title, and number by which the adjustment will be designated, a true copy of the title and text of the proposed permanent base adjustment to be voted upon as stated in the resolution, the summary analysis that has been previously approved by our office, and any arguments supporting and opposing the adjustment. After our review, one copy of the permanent base adjustment pamphlet must be mailed to each household containing a registered voter before the earliest date registered voters can receive early ballots. If pamphlets are not mailed by that date, voters must be provided a notice with early ballots that states when the pamphlets will be mailed and when and where the pamphlets may be assessed or viewed. Pamphlets must be not mailed less than 10 days before the election. ARS Section 41-56303F requires that cities, towns, and counties must submit their permanent base adjustment election results to both our office and the EEC. The entities must submit the official canvass of election results, or the resolution adopting the official results that have been passed and adopted by the mayor and city, town council, or board of supervisors.
As mentioned earlier, one-time overrides are the only voter-approved option to the expenditure limitation that are not required to be reviewed by our office. However, there are still statutory rules that entities must follow. Before the governing board even proposes or votes on a one-time override, the board must hold 2 public hearings on the proposed action. Arizona Revised Statute Section 41-563.01 requires that a notice of the hearings be published once a week for at least 2 consecutive weeks in a newspaper of general circulation. The governing board shall hold a special meeting and vote on the proposed override immediately following the second public hearing. After the vote, a notice must be published in a newspaper of general circulation that details the record of the vote, the amount of the proposed excess expenditure, as well as the purpose or purposes for which the excess expenditures will be expended, and the source of revenues to be used to finance the expenditures. If this vote is passed by the board, it does not put the override into effect. This is simply approving the proposed override to be included in an election of the general public. 10 to 30 days prior to a one-time override election, the governing board shall distribute a publicity pamphlet to each household containing a registered voter within the applicable political subdivision. The pamphlet should contain detailed information regarding the excess expenditure that is subject to a vote of the people. Specific to the one-time override, information provided should include the form in which the one-time override will appear on the ballot, including the official title, descriptive title, and the number by which the override will be designated. A true copy of the title and text of the measure to be voted upon in the form in which the measure will appear on the ballot. The amount of the expenditures which exceed the amount allowed pursuant to the Constitution, and the purpose or purposes for which the excess expenditures will be expended, and the source of revenues to be used to finance the excess expenditures. Finally, in regards to one-time override publicity pamphlets, the governing board is required to submit and publish its argument supporting the proposed excess expenditure. This is unique to the one-time override requirement. Entities cannot submit arguments for permanent base adjustments or home rules. Also, any arguments opposing the proposed excess expenditure should be published if submitted. If the one-time override passes, the entity must submit a copy of its publicity pamphlet and the election results to our office. Finally, it is important to note that the governing board has to separately budget for all expenditures made in excess of the expenditure limitation. Per Arizona Revised Statute, Section 41-563.02F, any expenditures in excess of the limitation, those that are made with regard to the approved override amount, can only be made for purposes stated in the publicity pamphlet.
We would like to direct you to our website, www.azauditor.gov, to obtain the most up-to-date information regarding cities, towns, and counties. You can find a variety of useful resources on our city and town homepage, including the UERS manual, various forms and memos, frequently asked questions, and other webinars. We also have a resources page for counties as well. Finally, we encourage you to contact our office for any additional questions that might arise. We would like to thank you for joining us. We hope you found this information useful and wish you much luck in the preparation of your permanent base adjustments and one-time overrides.